Asset management companies have experienced corrections of over 20% from their recent highs, making their valuations reasonable for potential investments. Before delving into the investment feasibility, it is crucial to understand how AMCs generate revenue. AMCs operate mutual funds, which are collective investment vehicles that pool money from multiple investors and invest in various financial instruments such as equities, bonds, government securities, and money market instruments. Investors can choose to invest in these mutual funds through systematic investment plans or lump sum investments. AMCs charge fees for managing these funds, known as the total expense ratio, which covers various expenses such as sales and marketing, administrative costs, transaction costs, investment management fees, registrar fees, custodian fees, and audit fees. The Securities and Exchange Board of India sets a maximum limit for TER. As of April 1st, 2023, the following is the maximum permissible TER. Indian mutual funds currently have approximately 64.2 million SIP accounts, through which investors regularly invest in mutual fund schemes. The monthly inflow has increased from 3,122 crore in April of 2016 to 13,728 crore in April of 2023. The net inflow of funds year on year over the past 7 years have grown at a CAGR of 20%, with a massive 1.5 lakh crore being invested through SIPs in FY 2022-2023 alone. Despite these positive trends, India's equity mutual funds asset under management to GDP ratio stands at a mere 5%, in contrast to 75% in the US, 55% in Canada, and 40% in the UK. However, favorable micro conditions such as the demographic dividend, increasing financial inclusion, higher disposable income and investable surplus, growing financial savings, greater investor awareness, investor-friendly regulations, transparent products, ease of investing, tax incentives, expanding distribution coverage, digitalization, and the perception of mutual funds as long-term wealth creators are expected to be the key growth drivers for the mutual fund industry in the coming decades. As of March 2023, there are 44 AMCs operating in India, with a total AUM of 38.38 lakh crore, which has increased from 6.65 lakh crore in March of 2012 at a CAGR of 19% year on year. The top 10 AMC companies manage over 80% of the total industry AUM, but currently only 4 of them are listed on the stock exchange. The AUM can be further categorized into debt, equity, liquid, and ETFs. Equity assets continue to dominate the AMC's portfolio with a share of over 40%. It is noteworthy that ETFs have gained popularity with their share increasing from a meager 3% in 2018 to 11% in 2022. Among the listed AMCs, HDFC AMC has the highest AUM, followed by Nippon Life. The asset mix of these AMCs reveals that HDFC and Aditya Birla Sun Life focus on building debt, equity, and liquid assets, while Nippon and UTI prioritize equity, liquid, and other assets including ETFs. These companies have maintained a healthy return on capital employed, with HDFC, Nippon, and Aditya Birla consistently maintaining a ratio of around 20%. However, HDFC AMC has experienced a continuous drop in ROCE since its peak in 2012 due to increased competition. As the AMC business is asset light, the return on asset is maintained above 15% by HDFC, Aditya Birla, and Nippon. the net profit margin remains healthy, above 50%, and has shown significant improvement over the past 4 years. Several factors pose potential challenges to the industry's growth. Effective from April 1st, 2023, gains from debt funds are subject to income tax based on applicable slabs, eliminating the previous benefit of long-term capital gains tax and indexation. This change has made debt funds less attractive and resulted in outflows. Furthermore, SEBI has mandated the inclusion of GST and transaction cost as part of the TER, which were previously charged separately by distributors. This move will have a negative impact on AMC's margins. Additionally, SEBI may propose a reduction in TER for large fund houses with equity AUM exceeding 50,000 crore, capping it at 1.25% to 1.5%. If implemented, this proposal will negatively impact the top 10 AMCs based on AUM. Furthermore, a recent paper submitted to SEBI has suggested the application of performance-based fees for mutual funds, which could significantly impact the future profitability of AMCs. Given the uncertainties and potential regulatory changes expected in the future, it is prudent to adopt a wait-and-watch approach towards the asset management sector. While AMCs have corrected more than 20% from their all-time high values, and current valuation multiples appear reasonable for long-term investments, it is important to carefully consider the headwinds and challenges that may affect the industry. Monitoring these factors will enable investors to make informed decisions about the investment feasibility of asset management companies.